Hey guys, I'm going to talk about flow traders today. It is my second biggest position, and if you've watched some of my other videos that show my portfolio, you'll see that it's about 14% of the portfolio and that I've marked it as a hedge. So I wanted to do this video just to chat about the company a bit, what my thoughts are on a business model, and also why I've marked it as a hedge. And I think I also need to use these videos to be accountable. So this company has not performed the way I thought it would in this type of market. So I want to talk a bit about that and see where maybe I'm going wrong or maybe I'm just being impatient. All right, so first off, these guys are a liquidity provider. They're a market maker and they're located in the Netherlands. They work primarily with exchange traded products, and so that's like ETFs. And I believe they originally started with just stocks, but now they've expanded to bonds, currencies, and also crypto. This is very recently as part of their growth plan. So all those three areas give them quite a long runway for growth because, as we know, bonds are a far bigger market than stocks. And then also currencies are a massive market as well. So the way these guys operate is that they make money. They make money in all markets, but they primarily make the most money in volatile markets. So if the VIX is higher, they usually have earnings that correlate very strongly with the VIX. So the idea behind being a hedge was that in past market declines where the volatility spikes up, their earnings also spike up, and in turn the stock spikes up as well. So when markets are more volatile, what happens is when these guys are making the markets, the volume goes up on markets when they're falling, and the other thing that happens is the spread widens, so that those both increase their margins on their trading. And so if we look back at 2018 and 2020, when there was market problems, you can see the stock responded well. And in 2020, they actually earned, I think it was $8.25 per share in earnings and paid out a dividend of $6.50. So that was almost all made during the period that we all remember in March and April. But they did make money for the rest of the year as well. 2021 earnings were lower because, as we know, the volatility was quite low in 2021, where markets just kind of like marched higher. The stock market did anyway. It was on a bit of a slow grind up, and so that hurts their earnings when stuff's like that. But they still made $2.50 per share, which puts the current price earnings ratio of less than 10 when the company's trading at $24. If we look at the performance year to date, the company is actually down 25%, while the S&P is down less than 20% at this point. And so that is not the way I thought it was going to play out. I thought that if the S&P did what it did and all the markets are down with the volatility higher than it's been since 2020, that the stock would respond upward, but it hasn't done that. I'm actually down about 20% on my position. My average cost base is about 30. So this is a bit confusing to me. I don't actually understand what's going on, but I can try and piece together some of the things that are maybe happening. I think possibly just the general sell-off in Europe due to the war and due to the economic situation there. Maybe it's just being thrown out with everything else. That could be one thing. And one thing from a company-specific perspective is they previous to this year, they paid maybe 70+% out of earnings as dividends. So the dividend rates have been quite high because they don't need a whole lot of capital to grow. But this last year, they've said they're going to cut the dividend a bit and invest in more growth. So the dividend looks like it's about 50% now of earnings. So possibly people have noticed that, and that's a problem as well. But I mean, if I'm a long-term owner in the company, I actually prefer them to invest in more growth going forward. So, I mean, that's all that I can, if you have other ideas, please let me know, but I'm a bit confused as to why this isn't working. Now, in terms of being a hedge, it is still functioning well as an earnings hedge. right, as a business hedge. So if we see, everybody's afraid of the recession right now, and whether or not we get a technical recession or not, I think we're actually in one. If you just talk to anybody, they're probably being a bit more stingy with their spending right now, a little bit worried about inflation. Job security is not as high as it was last year. So I think the recession stuff is real, and a lot of companies, I think, are going to feel the pinch now if they aren't feeling it already. I mean, I own ASOS, and they're getting killed by this, by the inflation and supply chain stuff. Micron just warned about their next quarter. Semiconductor demand is coming down. So I think we're starting to see it across the board. But for flow traders, they posted a 1.25 earnings in the first quarter due to the high volatility. The volatility is actually higher in the second quarter than it was in the first quarter. So I think they're going to make at least 125, and that will put the earnings for 6 months up to 250. Now, if the volatility goes to very low levels for the rest of the year, I think they'll make at least 330 for the year. If volatility is up, stays high, they could make up to €6 for the year. So that's sort of my range of earnings for the year. But if you compare either of those numbers to the current price, it seems like it's quite undervalued. The stock's quite undervalued. In terms of the business growth, it's a kind of a tricky company because it's hard to tell the growth rates of the company by looking at their income statement. Now, their net trading revenue bounces around with those earnings moves, and so if you just look at those, it looks like some years they're up and some years they're down. So that's not a really good gauge to figure out growth. But if you do look at that over the long term, they're compounding that net trading income at 17.3%. So I think the longer term view of that makes more sense to look at because the volatility sort of evens out over time. But two more metrics. One is the ETP value traded, which is up 24% per year since 2012. So that's another metric you can look at to judge growth. But I think the better metric is the assets under management. So that one doesn't fluctuate with the VIX level or the volatility. And as we can see over the last year, that's up 23%. So the company, it looks to me like the company's the growth plans are paying off now. And if you look under the hood, the metrics on this company look quite good. Now, going back to my purchase theory, it's basically twofold. One didn't work out. So one, I had this idea that if we had a market meltdown, which kind of we've had, what would happen is the stock would go up due to the volatility, and then I could trade some of it in for stuff that had fallen. Right? There's a lot of stuff available right now that I think looks pretty well priced. So that was my original plan, to be able to trade something high for something low, but it hasn't worked out that way. So the other idea I had, which is basically the way I operate, I always have a plan B. So we're in plan B now, which is just to allow the business owners or the management, let's say, to execute the growth plan and just hold on to this business that I think actually is a very strong business long term. And I do think this company has 10x potential as long as they continue to move in the right direction in terms of their market share and their growth plans. So that being said, I'm essentially forced to hold this one now, and I'm happy to hold it. I don't worry about this company much. I think they make money in good times, they make money in bad times, which makes me really confident in holding it. I'm not worried about a recession with the stock. I'm not worried about inflation because they have natural counterbalances to those things. There are a few risks here that I've got on my radar, so I'll just go over those quickly. Now, the main problem that I have with this company is that I don't really understand how they do what they do. right? I understand I understand the company generally. I understand what they do, but I couldn't tell you how they operate in the back offices to make these markets. So there's a bit of an ignorance risk here for me. Now, I guess what I'm keeping an eye on for that one is I'm looking at market share and their position in the market. And at the moment, they are #1 in Europe, and they're rising in North America, which are the two markets that matter. In Asia, they're not doing as well, but that's not their main focus right now. Their main focus is in, like I said, in their new markets, bonds, stocks, and cryptos to a lesser extent. And most of those are, as we know, the financial center of the world is the U.S. So the U.S. is the one that matters here. So if they start losing market share and they start look like they're faltering on that front, that would be a red flag for me. But I don't see any indication of that yet. Related to the market share, they do face pretty strong competition. This is not a business for dummies. So they're up against really strong players, companies like Citadel, and I worry about the possibility that one of the big fish might attack their little niche in the ETPs. So I've got to keep an eye on that as well. The last risk I see here that is the counterparty risk. So what they do is they'll make the trade, they'll set the market, they'll buy or sell from whoever's on the other side of the trade, and then they'll offload that product somewhere else to a counterparty. So they don't hold the risk on the books. But I can see that the risk might be that if they have a problem with their counterparty and they get stuck holding some of the risk, so counterparty blowing up or whatever, that might be another risk that's out there right now. I think that's it for risks that I want to touch on. But overall, this company to me looks like it has a really long runway for growth. It looks like they're growing quite quickly under the hood, and the price to cash flows here is in my opinion very cheap for a company that looks like they're growing at the rate they are. So that's sort of my general idea here. I'll keep an eye on it ongoing, but typically this is a fairly boring company to follow. Most of their earnings reports are, basically the same. Assets under management are up, and the VIX did this, so we made this much money, and it's a pretty straightforward situation. But if I see something that changes, I'll do a video on it, or if I have another insight that maybe I figure out why the stock is actually down. Maybe there's a real reason for it that's stock specific, but I can't really see that at the moment. Anyway, that's it for today. Hope you enjoyed the video, and if you have any comments, please leave them, and I will get back to you as soon as I can. Have a great day.